So what does this Swiss surprise mean for consumers and for investors? And who, if anyone, might benefit from a more costly Swiss franc? Ever notice how expensive it is to travel in Switzerland? Well, it just got even more expensive. A lot more.
Your cappuccino is going to cost you $10.
Unexpected? Well, Christine Lagarde, who heads up the International Monetary Fund, once thought to be the referee when it comes to global currency maneuvering, was not contacted.
This was a bit of a surprise. I would hope that it was communicated with other colleagues from central banks. I'm not sure it was.
Who benefits? For now, Swiss consumers and anyone already holding Swiss francs. An item costing 60 francs in Davos yesterday suddenly costs only 51 francs today. But those consumers don't drive Switzerland's economy. Exports do. Food made by Nestle and watches by Swatch got a lot more expensive to buy around the world, dimming prospects for those stocks. Swatch CEO Nick Hayek blamed the Swiss National Bank, saying, "Today's SNB action is a tsunami for the export industry and for tourism, and finally, for the entire country." The big Swiss banks face a rocky road ahead, too. UBS, Credit Suisse, and Julius Baer all make a lot of money in U.S. dollars, British pounds, and the euro. Before today, Swiss banks figured a rising dollar would help them in 2015. It's still rising, but they won't benefit as much as they hoped. So why did this happen now? With the European Central Bank expected to announce a new round of stimulus, or QE, next week, in hopes of jump-starting its stalled economy, pressure would have built to uncap the Swiss franc anyway. More euros in the system should lower their value, and Swiss francs would look even more attractive if their price was still capped.
You cannot control your currency forever. The market is going to pressure you to where it wants to go.
By making the move today, the Swiss central bank avoided paying out billions of francs over the next few days to keep its currency down, ahead of that expected quantitative easing next week.